Hello, everyone, and welcome to another PropMoto webinar. My name is Franco. As always, I will be the moderator for this. Thank you so much all for joining. Today, we are going to be talking about retail real estate and particularly how it's adopting to the shifting retail trends. I'm not sure about all of you, but I have at least started thinking about Christmas shopping. It seems to get earlier and earlier every year, but I think for the retail world, that's probably a good thing. I know a lot of retailers make a bulk of their profits on these, last couple of months of the year here. So I think as we're leading up to it, we're going to learn a lot about where retail's headed and probably a lot about, where, consumer sentiment is going into next year. So really excited to chat a little bit with our guest. Before I intro him, I will remind all of you that this is live and we are happy to take all of your questions. We're not going to save time for the end. Just please add them to the chat or in the Q&A here as we go. And, if we're able to, we'd love to jump in and try to answer those as best we can. So without further ado, I would love to intro our guest here. His name is Ben Witten. He is the head of real estate at Placer AI. It's a location intelligence technology platform. Hi, Ben. How you doing?
Hey, Franco, doing well. Thanks again for having me on. It's always good to be back with you and the PropMoto group and dive into what we're seeing on the ground, especially at this exciting time as we move through the fourth quarter and are getting closer and closer to the holidays every day. Still got some shopping to do, so
Yeah. Well, we
making
got
me a little
time.
little nervous, but it's good energy.
Yeah, yeah. No, it's great, having you on because I feel like every time we talk, things change. The retail world is, pretty quickly changing, and I think when I think back of, a few years ago, particularly pre-pandemic, retail was doomed, right? But before office was doomed, retail was doomed,
That's
right?
right. The
Amazon was going to
retail
get everybody's
apocalypse.
lunch, yeah. And now that just seems like such a crazy sentiment. Looking at how retail has been one of, if not the best performing kind of real estate assets in the past couple of years here coming out of the pandemic. And I think what's so fascinating to me is that the way that retail has been able to be so successful is by pivoting, right? They didn't just kind of business as usual. I think there's a lot of retooling, because we do have the Amazon in our pocket at all times, right? And to be able to deliver something else, I think is really huge and what everyone's kind of trying to figure out now. So yeah, I'd love to hear a little bit more about everybody that we have in here. If you guys have a chance, jump in the chat here, let us know where you're from and whether you're in the real estate or the occupier side. That always kind of helps us define our conversation a little bit. But without further ado, Ben, I'd love to have you share some of the data that you guys are sitting on and go over how some of these retail trends are really adapting to the current landscape.
Awesome. Thanks, Franco. And yeah, you mentioned Amazon, and it's interesting, as they kind of continue to make the push with Amazon Fresh and are selectively expanding to new markets, really based on consumer trends and the data they're seeing. And so, just to your point, even as prolific as e-commerce is, still seeing a lot of those players continue to see the value of physical retail and the need to
Sure.
expand. So definitely, well, excited to dive in and wanted to cover a few things. We'll cover certainly some of the key trends we've seen in 2024 and recap those. We'll also talk about some of the projections going into 2025 and beyond. So before we do that, just wanted to kind of give a quick overview of what is Placer, what do we do, how do we do it? And in essence, what Placer is doing is looking at a number of different data sets, including mobility data from, think of cell phone location data, consumer trends, visiting locations, right? So we're seeing millions of device visits to locations. We're seeing the consumer journey in terms of favorite places that consumers are going to. We're analyzing that data, and then the exciting part is really visualizing and presenting those insights that are actionable in terms of making decisions about site selection, making decisions about merchandising and which retailers I want to bring to my shopping center, thinking about how I can better serve my audience of what are their preferences, what are their brand affinities, what sort of events really, drive an outsized visit share or attraction at a certain location. So there's a litany of different ways to kind of leverage the data that Placer's aggregating and providing. But those really do stem and serve across, both the landlord real estate side as well as the tenant occupier side. So it's always fun to kind of see our clients as they come up with new use cases and ways to leverage the mobility data. And occasionally you hear one that's really off the wall that you haven't thought of, and so it's really fun just to continue to iterate with our customers.
Yeah, and I'll jump in and just say that what's been fascinating to me about learning this kind of new retail kind of research landscape is that you can really build a customer profile in a way that you couldn't before, right? I think that sure, license plate trackers and kind of sales data could help understand a little bit of where people were coming from, but to be able to know where people, literally where they drove from, where they drove after, and all of the demographic data that kind of gets heaped on top of that, really seems to be, very, very useful to both retailers and obviously the real estate industry.
Yeah, yeah, definitely. I mean, we constantly hear, I want to know what makes my most successful stores so successful, and how can I find more sites, stores, locations, development opportunities similar to those successful locations, right? So it's all about knowing the consumer and what's at the heart of who that consumer is, and being able to then identify similar locations. Certainly. So to dive into it here, like I said, we'll start out just unpacking some of the 2024 takeaways and what we've seen from a placer data, foot traffic, consumer insights. So we'll start here. It was interesting looking at back to school, where we saw Target and Walmart both, especially in kind of early to mid-summer, over index on year-over-year traffic in a very big way. And we saw, Target continue to kind of hold very strong into August. What's interesting, I think, here is coming into the fourth quarter, into the third quarter, we saw Walmart really kind of turn a corner and turn up the pace, if you will, of year-over-year trends. And so, that's been an interesting one, as both brands think about omni-channel, the physical store, the role of online, how those two worlds are kind of blending together. And I know, like here in my market in Fort Worth, we've seen Target invest pretty heavily in curbside pickup, right? And so we know for Target, 95% of their sales are fulfilled through physical stores, whether that's shoppers going into store or it's curbside. It seems like a lot of those transactions are shifting kind of to that BOPUS, buy online, pick up in store. And even these brands are using those stores as a distribution point, right? So they're using the Walmarts of the world that have their own delivery, but they're using those stores as like micro distribution centers. It's been pretty fascinating to watch those trends continue to play out. And
Ben,
I
I just
was
want to ask you real
yeah.
quick, what do you think is the reason that maybe we've seen Walmart, like trail off a little bit? It seems like Target had did, at least in the middle part of the year, did a little bit better than some of these Walmarts.
Yeah, so it's interesting. I think there's, some of that is merchandising. Target tends to be a little bit more forward thinking and leaning on the merchandising. So that's, I think, certainly part of the story. Um, they both, and depending on the segment of merchandise, do kind of serve the value. Obviously, Walmart more so than Target, but I think as the consumer has been somewhat, uh, under a higher inflation environment, and some of the pressure that's created has certainly driven the appeal of value, which I think is part of that rebound a bit, later on in the time series here we see with Walmart. But I think for Target, that the merchandising is certainly a kind of a key part of that.
Yeah.
Yeah, we talked about Q4, right? We're at this inflection point of we're a week out, which is hard to believe, a little over a week out from Thanksgiving and Black Friday, which is I'm having a hard time believing myself. But here we are, right? And I think what's really interesting about the data is you look at the visitation that you see, kind of this visits compared to baseline, and the department store format especially is just so incredibly dependent on kind of those last few weeks of the year. that is such a, they don't call it Black Friday for nothing, right? It's really kind of the difference maker for the department stores especially. But even these like hobbies and crafts as an example, you think of the Michaels and Hobby Lobby, et cetera, those groups are also very dependent on Q4, which makes sense, right? As folks are getting into the season and into the spirit of the holidays, where they also see a very meaningful ramp up into Q4 and into the holiday season. And so I think it's interesting, some of these superstores, even so the Targets and the Walmarts and the Costcos, they also see a meaningful bump, but nowhere to the extent that the kind of the hobbies and the department stores. And so it kind of makes me wonder, and I think a lot of the retailers are thinking about how can we drive more visits throughout the year, right? Throughout those off-peak times, which kind of continues to be the age-old question of how do we drive visits, how do we drive sales, not just in Q4, at the 11th hour for Christmas shopping, but actually throughout the year.
Thing that surprises me, Ben, is that, it seems like Christmas season starts earlier and earlier every year, right? Like the Halloween stuff gets put away and the Christmas stuff comes right out now, basically. But it still hasn't stopped people from, basically last minute shopping. That is still a very, very real trend of that last couple weeks leading up to it, people kind of scrambling and obviously, turning to department stores, which I guess makes sense. There's a little bit more you can find there, maybe some discovery, something you weren't necessarily looking for. It was hard to shop for people. But yeah, that's a little surprising to me that we still see so much shopping going on those last couple weeks leading up to Christmas.
Yeah, and it's interesting this year because you've got a shorter holiday season than last year with
Mm.
Thanksgiving later that kind of compresses the holiday shopping even more so. And so this year we saw a lot of retailers kind of November 1st or late October, like start to push, holiday merchandising even sooner. And I think what's interesting is even in the department store space is you see like groups like Nordstrom that have released, a new mobile app where they're leveraging AI to provide even more curated, merchandising and recommendations and what have you, where, you know, I would say Nordstrom is kind of the darling of the department store groups that have really leveraged and benefited from omni-channel, right? To using AI, the elevated mobile app experience, allowing users to select their distribution channel if they want to shop in store, if they want to pick up, if they want, delivery, et cetera. And so we're certainly kind of seeing a bifurcation of adoption of tech in those different channels, and it's pretty interesting as those retailers continue to evolve. We have kind of looked at an index of 100 of the top chains. So think of the top 100 brands. We call it the Placer 100 index, but it's your Targets, your Walmarts, your McDonald's, your Chipotle. It's across the gamut. And I think what's been especially interesting year over year is that the majority of months we've seen a positive year over year, comp trend. Some months in excess of, 3, close to 4%. Um, and to me, what it emphasizes is the continued need and viability of physical retail, right? That you continue to see positive kind of year over year growth. Even coming out of the pandemic, where we saw visits exceed 2019 levels for the first time, early last year, but we're now comping even over last year very, very favorably, which continues to be positive early indicator of the consumer.
And Ben, when you break these numbers down, like maybe you split them out between, let's say, retail and restaurant, are they pretty consistent, right? Like when the monthly visits are going down, is that going down, for both large categories?
Yeah, so it's a great question. I would say it really depends, and uh, we'll get into some of those like categories here. I think it's a great segue to talk about specific brands, if you will, or chains. When we think about apparel as an example, right? So I think the answer is it's very nuanced, and it depends. One of the things that we've seen is with elevated grocery prices and inflation, a lot of consumers have shifted to dining out of home or dining drive-through or QSR fast food, channels. And so just to your point, right, it really depends. And when we look at apparel in particular, we see that there's this bifurcation of kind of the full price and the off price or value apparel. And so the groups like TJX, Marshalls, Burlington have really continued to comp very favorably year over year. But if you look at apparel overall and you exclude that off price or value segment, you see a more of a bleak picture, right? On year over year, those composites are comping uh, you know, negatively, right? Where they're down 5%, or in January they were down 10% year over year. And I think it speaks to, the consumer again that has been enduring kind of elevated prices, right? You now see some retailers are rolling back prices where they're saying, hey, I saw Target and Walmart have both announced we're rolling back prices on hundreds or thousands of SKUs. And there's almost this element of were we a little too ambitious in some of the price adjustments that we made, in that high inflationary environment in 22 and 23. And so um, I think this slide really supports that price elasticity that we see, right? The consumer has opted away from some of those full price, chains and options, which the department store would fall in that category, and opted for more value.
I wonder if there's a cultural element to this too. I mean, I know like going to these kind of value chains, they're a little bit more work, right? You don't just walk up and find your size and everything. There's a little bit of hunting going on, but it seems like with the rise of thrifting that there is a consumer segment that actually likes that, right? Like they're okay with going and spending some time going through the racks and looking at everything. You think that maybe there is a little bit more of an acceptance of the kind of extra work needed to go to some of these kind of value chains?
Yeah, 100%. And I think there might even be a segment of the population that enjoys, what you or I might think of as extra work or effort required to go find those deals. But absolutely, the treasure hunt, that TJX, Marshalls, Burlington offer is certainly, I think, sought after. You've got these kind of full price brand names, but at discount or value prices, and that's a very compelling offering that continues to resonate. I think the other piece is, the point you made, the treasure hunt aspect of it. A lot of times these brands, they have very limited, e-commerce, presence, or every store is merchandised differently, right? You don't know what you're going to get at this TJX versus that one. And so that does drive the consumer into the physical store, and it drives repeat visits because that inventory is constantly changing, right? They're all merchandised a bit differently, and you don't know exactly what you're going to find. So I do think there's an element of that, like, surprise and delight of the hunt and the adventure and the journey that really drives those repeat visits, and it's a lot of why these groups have fared so well on a year over year basis.
Yeah, I could see that. And going back to our kind of Target and Walmart conversation, I think Target's actually done a pretty good job of this. Now, when you walk into most Targets, they have a little section right in front that is rotating, seasonal, kind of like a bargain, some bargain bin type stuff that seems to kind of steal a little bit from that element of, hey, come on in. You never know what you're going to find here. You might find that really cool deal you didn't even know that you were looking for, right? Instead of the Walmarts, which I think are more of like, okay, I know what I'm going to go, be looking for when I go to a Walmart, like that kind of the treasure hunt. You can see the glow on people's on faces when they find that perfect thing at a discount store. That, yeah, I certainly don't get that online.
Yeah, no, it's such a good point, especially with young kids. You take them in there and it's like they're going nuts in the dollar or the under $5 bins or whatever. It's like, do we need another set of, I don't know, finger paints or chalk, chalk boards or dry erase boards or stickers or coloring books? Like, but yeah, I mean, that stuff does exceptionally well. And I think to your point about like the holiday merchandising, it really resonates. Like, I mean, last year my kids picked out these little miniature scarecrows that we still have, and got them out for Thanksgiving. And it's like great, so
Yeah.
definitely that impulse purchase is I think the retailers they very much are tapped into our psychology.
Yeah, yeah, kids too, right? It's nice to get those out of the way right off the bat. They already got what they want. They can kind of play with it while you walk around. There's something
Yep.
to that. I got
Yep.
a question here I'd love to field real quick, Ben. It says, off-price retailers are much more convenient than full-price apparel retailers in the communities and centers. So this is a good point about the real estate underlying it, right? The instead of a mall where you maybe have to park, walk across the mall to a department store, right? There is a certain convenience. Most Marshalls and Ross and Burlington's are in maybe more of a strip mall type outdoor situation. I mean, do you see that when you look at some of your numbers? Do those because there are other like maybe like an outlet, I think would be a good example of a very convenient, maybe more mall format. Does that convenience seem to play into retail traffic a bit?
It absolutely does. It absolutely does. And it's, the convenience piece you can't underestimate. It's I would say, the three buzzwords for retail, successful retail continue to be, convenience, experience, and value.
Mhm.
And the convenience piece, you can't underestimate because what's the alternative, right? Like you said it, you're competing against people on their phones shopping Amazon, right? So if it's not convenient, odds are that, you're as a brand going to lose out. And so thinking about, you know, we're a largely, car driven society, right? I
Mhm.
mean, some markets are more walkable than others, but these formats, the power center format, the neighborhood center format is a vehicle centric format. And so convenient access in and out, you know, cross access, co-tenancy, right? Signalized intersections, all the things, right? Absolutely drive, the success of these brands. And by the way, they're pretty phenomenal at site selection and thinking about where we want to go and looking for those characteristics that make a site, easily you can find it, you can get to it. And that's really what it comes down to.
Yeah, it seems like a lot of them are taking up the space, the voided space from a lot of the, pharmacies and drug chains that are going out of business too, right? They're usually in those kind of shopping centers adjacent to a supermarket that I think make a lot of sense for some of these. They're the right size and super convenient. Another trend that I have seen playing out is having to pay for parking at malls.
Hmm.
And while I'm sure that is a revenue generator, I think it does kind of maybe handicap them a little bit about, people that just want to come and pop in for a couple minutes, right? Like, I don't want to have to deal with the parking. Whereas all of these kind of, you know, these different, the Rosses and the TJ Maxes, it's going to be parking. It's going to be easy. You can go in for a couple minutes and leave if you don't find anything. It just seems to have a convenience factor that I think people really appreciate.
Yeah, that's actually so it's interesting, and you're right. Like the paid parking can definitely it can work if done correctly, but I think it can also backfire because it creates more friction, right, to the consumer actually coming to the property. When I was on the owner operator side of Trademark, we actually did the opposite and rolled out valet during peak hours and at no cost. Obviously, they would get tips and gratuity, and there was a cost at the property level. But what it did is it drove a much higher volume of visits to the restaurants, to the shops, et cetera. And with percentage rent, clauses, et cetera, as a landlord, we were aligned with the success of those retailers and restaurants. So it's almost like, how can you eliminate as much friction as possible to really allow that key consumer and customer to get to the property as often as possible, stay as long as possible and visit more frequently.
I'm wondering too, have you seen any change in kind of dwell time? Like, do people tend to stay longer or shorter at these, kind of off full price places rather than the department stores?
That's a good question. I haven't looked specifically at that's a great idea for a slide to look at kind of the discount versus the full price. I would imagine so. We definitely do see longer dwell times with shopping centers that have, retail component or excuse me, entertainment components,
Mhm.
blended in with traditional retail. So that's certainly a part of it. I'd say on the flip side, there is a strip center segment that is kind of focused all on services or convenience. And for those convenience centers, you kind of want the opposite, where you want as short a dwell time as possible and to be able to, service as many transactions as possible. So it kind of depends. Like a, UPS shipping center, for example, right? It doesn't really do you good to have, cars blocking
Yeah,
up the parking versus allowing folks to get in and out, or,
yeah.
with QSRs and whatnot.
Just another example of what retailers can dig into now, right? With this new kind of data sets we have.
Yep, exactly. Exactly. And just, yeah, on that topic, it was interesting, a use case that came up from one of our clients was they had a grocery anchored center and they were trying to bring in a fitness use, and the use was restricted by the grocer. They didn't allow any fitness uses at the property. But what the owner was able to do, they actually used placer data to show, hey, looking at your visitation pattern and looking at this same fitness operator across town, we can prove that their visit patterns are counter cyclical. And so
Mhm.
by bringing this gym into the shopping center, it's actually, counter cyclical demand. They're not going to monopolize the parking during your peak hours. And by the way, we actually know that, 15% of that gym clientele actually shops at your store anyway. So if you can make that shopping trip more convenient, they're going to shop more often, right? Versus your competitor. And so they were able to actually prove out that synergistic
Mm,
merchandising.
really
Yeah,
interesting.
lots of fun use cases. And migration is another use case that continues to kind of proliferate across our customers, from the CRE owner, investor, developers to the retailers to even like cities, counties, towns, economic development corps, thinking about migration trends, population growth, job growth. And it's been interesting to watch, which regions have seen kind of outsized growth, from the early kind of pandemic to over the last, 12 months and so on. But, no surprise, Austin continues to be on the top of the list from a net migration change, certainly from kind of the beginning of the pandemic, but also uh, over year over year, which continues to move with the kind of the job growth, the numbers we're seeing. Austin continues to be very hot. Some of the others, like Fayetteville, right? We see quite a bit of migration there, attributed to kind of the lifestyle, the fact that you've got the university and the college town kind of vibe and energy and up and coming retail. That continues to be one that is kind of high on the watch list. And then Raleigh as well, Raleigh, Durham, and Raleigh Cary, um, with the tech triangle, with kind of the emergence of the R&D that we're seeing there, um, the continued appeal, right, of the Southeast, the Sunbelt markets, but especially the Southeast, the Carolinas, and Raleigh continues to be high on that list.
Yeah, I mean, I guess excluding maybe Austin, which I wouldn't call affordable at this point, there seems to be a bit of a affordable housing component to this, right? That a lot of these, I think, places are getting maybe a net migration because it's just, your cost of living is down. And then people with lower housing costs often spend more elsewhere, right? So
Yep.
I could see these all being, a good case for an investment thesis, right? Because of, people are struggling, I think, to pay their bills in a lot of more expensive metros.
Yeah, that's such a good point. And we actually see that, affordability continues to be one of the highest drivers and draw factors of migration, right? So seeking affordable housing, seeking, you know, whether that's affordable housing or it's public schools or whatever it may be, that continues to be a very real trend. And it's interesting too. We see that for these markets in particular, the incoming residents tend to be moving from younger areas. So it's a lot of times, recent graduates or
Mm-hmm.
young families that are relocating. And so, uh, as hybrid work and in some cases remote work continues to be a trend, that has provided somewhat of a shakeup of where some of these recent grads want to move post college and what have you.
Yeah, we heard a lot of talk about kind of generation rent, that the younger kids were fine with renting, and I think that might be a little overblown from what I've seen. I think a lot of younger people, particularly younger families, still want to own a house. They just have to go maybe to a different area to be able to do that, right? It's maybe a little inaccessible to where they grew up or where they went to college, if it's a more expensive place. So interesting that we're seeing younger people kind of flooding into some of these traditionally kind of older cities.
Yeah, definitely. And that build to rent segment has also served that population quite well, where it's, a family or a couple or a single, may not have the budget or the down payment or to weather current interest rates. But the build to rent segment is still kind of offering that lifestyle of, hey, you've got a yard, you can have a dog, you've got a pool, you've got these different aspects. And so I know in North Texas, build to rent's been very hot and continues to drive a lot of that population growth for folks that might have been priced out of buying a home, or at least at this time. So it's good to
Uh-huh.
have other housing options available. Yeah, so we're spending a lot of time, and a lot of our clients have been asking, about the kind of urban suburban dichotomy. How is that changing over time? Is that continuing to kind of bifurcate? Is urban catching up or having a resurgence, as compared to suburban? And so, thought it was interesting looking at traffic trends versus 2019, where we saw that kind of that light blue urban centers were lagging suburban by a pretty good margin. We've seen that gap really start to narrow, where some of the urban centers are starting to perform closer to those suburban shopping centers. And so I think part of that is probably is linked to return to office, some of the return to office mandates, or voluntarily or involuntarily, that's driven folks back to urban cores. It's driven folks back into major employment centers. And as part of that, there's certainly cross visitation before, after, or midday, going into some of these more urban shopping center formats. So continue to see a positive trend there, and kind of that urban recovery, but certainly an interesting one to watch.
Yeah, this certainly tracks the thinking in office right now too, which I think, after the pandemic, everybody kind of assumed, oh, people move to the suburbs, people are going to want office in the suburbs, right? The kind of hub and spoke office. And I think a lot of occupiers have gone away from that. I think that they would just rather have one urban office that is, flashier, nice, class A or trophy class building, which aren't really available often in suburbs, right? You kind of don't have that same high level of building stock. So I think it's interesting that we're starting to see more, more urban shopping that, as people are probably returning into urban areas for their offices.
Yeah, I would agree with like the exception of the suburban town center, right? Where you've got these like mixed use, vertically integrated environments that are new or newer, that have trophy office, have great restaurants, have, kind of the full gamut and experience of walkability and,
It's a
you
great
know,
point, right? Not
food
all
and beverage.
suburbs are created equally,
Yeah.
right? Some that I think do have really great town centers, and then some, places I'm thinking like Orange County, it's just miles and miles of housing developments with nothing else, right? Like true suburb.
Yeah, definitely. Yeah, Irvine or Spectrum versus, yeah, like suburban, just kind of homogeneous residential density. If you look at markets like the Woodlands, Texas, or Plano, Texas, with like Legacy West, and I think it really there has to be a density of uses and a mix of uses for these spaces to thrive. I
Hmm.
would completely agree. Like you'll look at Legacy West and like the integration of, you've got JP Morgan, you've got Toyota's North American headquarters, you've got a food hall, you've got great retail and restaurants and hotel. And when you bring all those elements together, it really allows each component to thrive and outperform. And I
Absolutely.
think that's, as human beings, right? I think there's a desire for walkability and interaction and creating that certain level of density, whether that's in a traditional urban format or it's in a maybe more of a traditional suburban format, but that level of density, I think, can certainly work in both environments.
Yeah.
Why don't we jump ahead here? We can kind of talk to maybe some of the 2025 trends, emerging. I'd say, going into 25, we certainly see strong, retail fundamentals October retail sales up, 6%. E-commerce was up over 9%, which is pretty wild. I even read some are projecting that for Q4 sales, 25% of those sales will be generated online. So it'll be interesting to see if that happens to play out. That would be almost 10 basis points higher or 10 percentage points higher than, current e-commerce sales. So, certainly there is a ongoing blend of omni-channel, physical retail, online retail. Be interesting to continue to watch. I'd say in terms of the consumer, there's a couple of categories that have lagged kind of on a year-over-year basis. Retail in general, we've seen positive comps year over year. We have seen some categories lag, home furnishings being one of them, where, a lot of times that home furnishing category is highly discretionary, right? Like a new couch. Do I really need a new couch? Right? A lot of times is also correlated to associated with, new home purchases, right? So we've seen folks kind of defer and delay moving or buying a new home and what have you. And so that has had kind of a trickle down effect to the home furnishings category. Um, on the flip side, home repair and maintenance, et cetera, like Ace Hardware, I think is really interesting. They actually reported, record sales and really positive year-over-year comps. And so again, I think it's a very nuanced kind of haves and have-nots. Ace Hardware is invested in, a lot of, I would say, discretionary purchases. I know like the local stores here, they have like all the Yetis and the Green Egg and like the Traeger grill, and it's not like your traditional hardware store. They've almost like over indexed in certainly kind of the discretionary spend and not just home improvement but home decor and uh some of the things like a premium grill and culinary
Mm-hmm.
experience. So that's been interesting to watch. On the consumer electronics side, we saw such a big pull forward in the pandemic and kind of following that, a lot of folks that bought, new TVs or they bought a new computer or an extended monitor or, things like that, that, some of that demand that pulled forward so much has created, challenging kind of year over year comp environment. We do kind of directionally see a positive trend in those electronic categories starting to move back towards hopefully positive comps, but time will tell there.
Yeah, definitely a lot of people invested in their homes during the pandemic, whereas now you only need so many new couches or new TVs, right? Now they're maybe don't have the same kind of need.
Yeah, definitely. And as we kind of think about, you see these headlines of, oh, credit card, balances are at records and so on and so forth, and excess savings has kind of been burned through from the pandemic and from stimulus that was available to households and whatnot. Uh, Credit card distress or delinquency is actually at, relatively healthy levels when you look at a long-term, you know, um, historical norm. So continues to be at a healthy level, although it is, on a positive trend. So it'll be interesting to continue to monitor that. But I do think some of these more discretionary purchases, like you said, the home furnishing, the electronics in a elevated pricing environment have kind of taken a backseat to, some of the other items, whether that be apparel or it be dining or experiences out. We talked about kind of the suburban urban dichotomy, and another interesting kind of nuance to watch has been this idea of convenience. And you highlighted the point for apparel, right? That these convenience based, whether it's a neighborhood center or a power center, tend to be more convenient, drive repeat visits, certainly comp favorably year over year. One of the things we've seen is that the share of visits beyond like a 7 mile threshold has actually grown pretty significantly for each of the grocery chains that we're following here. Um, from Sprouts, where in 19, less than 21% of those visits were coming from, beyond 7 miles, and now it's close to 23%. Or for Trader Joe's, it's almost 29%. And Great
Hmm.
Wall and some of the ethnic grocers, we've seen even a higher share of those visits from further away. And so I think it speaks to certainly the desirability of these brands, of what they've created, Part of that is you have urban sprawl where people live further away, and these retailers haven't caught up to expand or open new stores in some of these maybe tertiary or secondary areas. But folks come in town and they want to go get their cookie butter right at Trader Joe's, or they want to go to Sprouts and get the groceries that they're accustomed to buying maybe when they lived in town. And so that has driven and caused trade areas to grow. And so
Hmm.
in some ways we could call it a convenience myth, just in the sense that it is a maybe counterintuitive, right? That in some ways these trade areas have expanded for some of these grocers.
Right. I think all of these grocers have done a really great job of, creating some uniqueness, right? I think obviously, the consumer is probably driving by a few other grocery stores on the way to those purchases, right? But when you look at the Vons, the Ralphs, the Safeways, they kind of all are the same, where you think, oh, well, I'm going to go to Trader Joe's because I know they have stuff that I can't get anywhere else, right? Whereas I think a lot of the grocery chains have just become so homogeneous that there's no difference, right? If you go to a
Yes.
Ralph or a Vaughn's, right? And so that's an interesting point. I want to just make sure we hit another, something that got dropped in the chat, which I think is a good observation, which is, a lot of those electronics and probably some of the furniture as well that was bought in the beginning of the pandemic has about a 5-year life cycle, right? And so we might kind of start to see this kind of cyclical ups and downs because it did kind of force so many people to buy buy these bigger purchases all at kind of once. So yeah, 5 years after 2020 is going to be next year. So we'll have to keep an eye on that to see if we do see kind of a noticeable bump as people are replacing kind of broken TVs and scratch couches.
Yeah, definitely. Yeah, the latest like 4K or whatever comes after that, or
They always got some new
yeah,
thing for you
yeah,
to buy, right? They can't just
absolutely.
leave it alone.
Absolutely. Yeah, and I do think like for those discretionary purchases, I'm the type where I definitely want to go see it, you know, touch it, see how it works, see what it looks like in person,
Mhm.
right? Try on the
Talk to the
headphones, look,
salesperson, see what
talk to
they
the
think about
salesperson.
it. Yeah.
Yeah, but and Best Buy, I feel like is one that really thrives at that. Those the folks you talk to, they're always passionate and they know everything about every option, and 1080 versus 4K versus surround versus like I don't even know, right? All the things, and I think too, like you look at Oculus or you look at the Apple glasses, right, and all of it, and even like Ray-Ban now, where they've got these, they've got the
The meta.
yeah, the Meta exactly built in, right? Like there's so much emerging tech that I think is a prime use case for like wanting to go into a physical store and touch it and try it out before you
Hmm.
buy it. Because like, okay, if I order those, the Meta Ray-Bans, get them home, like, am I going to know what to do with them, right? I mean, I'm sure they have a pretty intuitive like setup process, but I would rather go talk to someone in person that owns
Hmm.
them, has interacted with them, and can like give me all the shortcuts and hacks before I dive into it. So definitely. Yeah, I'd say, one other emerging trend is this like smaller format. We've seen smaller format stores tested by some of the department stores like Macy's and, Bloomies. We've seen Sprouts test small format, concepts. And they actually used to office above one of the Macy or the Market by Macy's was one of the first in the country. And it was a smaller format store. It typically had newer, kind of more cutting edge merchandise. It was rotating at a pretty high frequency. And I think what's interesting, for this Market by Macy's concept is you see a higher share of weekday visits, which
Hmm.
these tend to be concepts located, near major employment centers where you've got major daytime population. Obviously that means they've got fewer, weekend visits, or they're less dependent on weekend visits, and you have shorter dwell times. So you might have somebody that pops in on their lunch break or maybe after work on their way home, so on and so forth. But it kind of spurs this idea of another touch point with the consumer where we're not waiting for them to come to us at the mall on Saturday, right? Or after work or in the evening, but it's actually a format that can be shopped, during the day, window shopped in the morning or during a lunch break. And so I think you got to give kudos to these brands that are kind of testing and incubating new concepts in these new environments because we do see
Absolutely.
that they tend to behave differently.
And back to your point about the kind of the kind of counter cyclical popular hours, right? I could see a smaller format store maybe being able to go in places where a larger one wouldn't by saying, hey, we're a weekday evening kind of a place, right? We're not going to maybe compete too much or as much with your kind of big Saturday Sunday stores and visits. So it's an interesting difference there.
Yeah, definitely. Definitely. And one of the other kind of trends is this retail media. There's the idea of media placement, out of home placement, digital or static signage and branding and the opportunity that it presents in physical stores. And what I'm always blown away by is the number of in-store visitors versus online, right? So you look at Walmart and the number of in-store visitors is almost 2x what it is online. And so just as you think about, how many consumers still opt for a physical presence, obviously the majority probably are both, right? But the fact that the number of impressions you're able to generate in that physical environment is just massive when you put it in perspective, right?
Mhm.
So I think it speaks to the potential in online. It also speaks to just the prevalence and the need and necessity of that physical in-store experience and the opportunity it presents for, branding and marketing and messaging to that
Well,
target
plus if you add
audience.
the fact that a lot of these online impressions probably came because they know they can go pick it up, right? Like if they didn't have a physical store at all, I think their online presence would go down as well, right? Where people know, okay, I'll maybe driving by Target. I mean, we do this all the time, right? We know, we're going to be drive by Target. Might as well just have something that we can kind of, have dropped in our car and keep going. So
Yep.
where if it was delivered, obviously, that's not always the case. That not everything can get delivered easily or cheaply. So it's
Yeah, and reverse logistics is can be a pretty big burden, right? On shipping and postage and packaging and then processing, right? You buy a shirt, it's the wrong size or the wrong color, or it fits different in person, right? You send it back. Like by the time it gets back to the retailer and they've sorted through it, it might be out of season or it might be, a SKU that they no longer carry, right? Or they have to go discount it to clear it. And so, in those instances where they've paid to ship it, reverse ship it, return it, process it, sort it, et cetera, it really uh, can certainly pose a challenge, which I think is why we've seen a lot of the retailers kind of tighten up their policies on returns and even excessive returns. Like I saw REI had really cracked down on that. They're looking out for like repeat offenders of habitual
I mean,
returners.
yeah,
Like,
some people were, going on month-long backpacking trips and then returning all of their
yeah,
boots
yeah,
and stuff. Like it was getting a little out of hand. I can
yeah.
understand.
That might be an extreme case, right? But it's, people are seeing what they can get away with.
Mhm.
Yeah, and the category I would say that continues to just kind of blow us away is the kind of membership, the Sam's, the Costco, et cetera, where again, year over year just continues to be very, very strong, comping positively every month, and some months, close to 10% year over year. And it's just incredible. And I think it's again the value, right? The buying in bulk, the discount, it's the lack of e-commerce. Costco, you're not really shopping online, right? You've got to go get your massive shopping cart and they don't even have bags, right? You got to like you put your merchandise in boxes and whatnot. But I think the value proposition there and the quality of merchandising is one that just the data tells a very clear story that continues to drive shoppers out in a omni-channel world.
Mhm. I feel like the Costco's and Sam's Clubs have also done a very good job of adding other services to the membership, right? I hear more and more people, getting solar through Costco, right? Like booking their rental car reservations, right? I
Yeah,
think having, it's all of these things above and beyond.
travel, booking a
Yeah, travel,
cruise.
right? Like sure you get a really great deal on mayonnaise, right? But that's like just a fraction of what you're getting for that, right? And so I think, from what I've seen, I think they've kind of brought this exclusivity, this kind of club feel that I think a lot of really appeals to a lot of people above and beyond just, because you're saving some money on some of the stuff, but unless you're really really buying in bulk, it's not the best place I would say to shop for everything.
Yeah, no, I agree. In fact, we were when we had babies and we were in diapers and all that, we were big Costco customers, and now that we're like out of that stage, it's like maybe we don't need the membership as much
Yeah,
because like did the math on like a per unit pricing and yeah, it's definitely right. It's certainly not for everyone, but for the segment that
yeah.
is about that experience, they are all in.
Another piece I think that we should mention is gas. I think Costco, at least here in California, has significantly cheaper gas than anywhere else.
Mm.
And I know people who have a membership just for that, right? If they have larger cars and live close to one. Again, those other non kind of retail pieces that you kind of, oh, it makes the case for that membership. Okay, I'll get the gas and I'll get this and I have access to this. I think they've done a really good job of creating this kind of halo effect around their memberships.
Yeah, absolutely. And it's value, it's convenience, right? It's all of that. It's like, oh, I'm already here getting gas at a discounted rate. Might as well pop in or get gas on my way out
Yeah,
and fill up my
absolutely.
tank for the week.
Even though I'm not, yeah, even though I don't need a full have a tank, like, oh well, I'm here,
Might
I'll
as
fill
well.
it. It's a good price,
Yep.
Certainly, it's more often than not, I think.
Yeah. Pretty incredible. Yeah. Great synergy. Yeah. So thinking about 2025, right? I'd say there's certain categories that are continue to surprise, that the club segment's one. Barnes and Noble has been really fascinating to watch because I
From the
remember
past.
a blast from the past, right? Like years ago, they were on the brink of, bankruptcy. They restructured, they closed a ton of stores. It was like a dead or dying brand and concept. Like who wants to shop at a chain bookstore when you have Amazon? And it's like actually a lot of people do. A lot of people love to read. I'm a big fan of physical books. I've tried the Nook
Mhm.
thing and the Kindle
I'm the
thing,
same.
right? And it's just not the same. Like you want to turn the pages, right, and touch it and feel it. And even like the new Barnes and Noble store, I think it was in DC. I saw like they've got a new prototype and concept. Just continue to reinvest, right, and test and iterate and build these experiential stores. Smaller format, but with the data that they have on all the best sellers, right, they can really curate and merchandise for that local market, right? Because
Mhm.
I think at the end of the day, like what we're seeing is the brands that put the consumer at the forefront continue to thrive, right? They iterate, they are merchandising based on what really resonates with that local audience. And
Absolutely.
that's continues to be a winning formula.
I think that the Barnes and Nobles back when they were really really successful too created this third space that I think a lot of cities don't have. You could sit and read, and it was nice, and it smelled like new books, and I think that the coffee shops, Starbucks of the world, took a little bit of that space, but from what I've seen is that they're kind of less and less focused on that, right? The new Starbucks don't seem to be as comfortable of places to hang out. They're a little bit more transactional. So I could see bookstores kind of coming back and being that, place where you could just, spend a couple hours and hang out and discover some stuff and no rush, right? Where, you don't have that same feeling in maybe a coffee shop anymore. If you could even find a seat, everybody's working.
Yeah. Yeah, no, it's interesting here in Fort Worth. So there used to be, to your point, there was a Starbucks connected to a Barnes and Noble, and you could actually like walk between the two. And it was perfect because you had like, college students and like studying and friends meeting and people just getting a coffee and reading a book. And it was kind of that perfect blend of like the neighborhood feel. And it truly felt, it was very communal, right? But I think, that store, which had to have been 20, I don't know, maybe 30,000 square feet combined, it was quite large. And I think the landlord realized that, the rents were, I don't know, 70, $80 a foot. And, when you're getting 10 or $15 a foot, it's the economics don't make that a long-term, viability. But
Yeah, and everybody just goes and
fond
reads
memories.
and then buys online. It doesn't
Yeah.
it doesn't
Yep.
help you much.
Yeah. Yeah. When you don't need your full CD section to go listen to your
Mhm.
albums and try them out, yeah, you don't need quite the same footprint. Definitely. Yeah, I'd say, as we kind of get close to wrapping up here, the overall trend we see in retail is, I would say, very, very bullish, right? We see continued unit growth. We continue to see, positive trends year over year compared to pre-COVID baseline. We see just, healthy growth where, we're back, 10 to, in some cases, 20% above kind of that baseline. So I would say, you know, in closing, right, the criticality of retail cannot be understated or overstated for that matter. Like the the role that essential retail fills is very, very important. And in addition to that, it's also all about experience, right? So the brands that are offering convenience, that are offering value, that are offering experience continue to thrive. And in a world where e-commerce may become, I don't know, 50, 20% or more of overall retail sales, we still see that the in-store experience continues to be essential, continues to thrive and serve a very real purpose. And
Hmm.
so, you look at, Blackstone's recent acquisition of ROIC for, what was it, $4 billion dollars at an implied, sub six cap, is kind of a further testament just to the role and need of physical retail. That there's
Hmm.
a lot of capital flowing back into the retail segment, that it continues to be a very viable, segment, uh, as we go forward.
Yeah, yeah. I think we've all, everyone at this point has used, e-commerce for the most part in the country, right? And I think we all kind of understand its limitations now, right? I think when it first came out, we're going to buy everything online, and I think we all kind of understand that that's probably not the case. There's all certain things that we like to go in for. I also think the curation is huge, right? When you go to sit on down at Amazon, it's like sitting down at Google, right? There's just too many options, right? So these small format stores, you're talking about bookstores, is a great example, right? Like, sure, I can go Google, a nonfiction book, but to have someone who's a book nerd say, "Hey, here's 5 really good ones," like that just really helps bump things and personalize things in a way that I I don't know. Maybe AI will start getting good enough to where it can start making those recommendations for me, but I've personally never had great experience, from the suggested purchases on Amazon. So I think, there's a lot of tailwinds for physical retail, and lo and behold, retail is not dead. It is doing great. But yeah, thanks so much, Ben. This has been fascinating. If anybody has any last minute questions, happy to field them. But if not, I just want to remind everyone, if you want to reach out to myself or Ben, have any follow-up questions, we're happy to facilitate that. My email is franco@propmoto.com. That's FRANCO at propmoto.com. Thank you all again for joining us. This has been fascinating. And yeah, have a great holiday season, everyone, and get out there and spend, spend, spend. That's what seems to keep our economy afloat. No matter what, people are always spending here.
Yeah, in the words of Peter Linneman, never underestimate the U.S. consumer.
Yeah, yeah. We definitely rule the world as far as that goes. Well, thank you so much, Ben. Have a great rest of the day. And yeah, thanks for all the insights. I appreciate it.
Thanks for having me on, Franco. Always great to see you.
Okay, cheers. Bye, everybody.